14 June, Wednesday, day name beer buying day. Let's go weekly, daily, hourly approach. Okay. Okay. Yesterday, bull bar closing near its high. Today, chances are that uh, further buying will continue as bull channel is created. Now, last week high are two major resistance. So this is the high of the last week. So starting Monday, Tuesday, and third candle is today bullish candle. Okay. Now, yesterday we seen bullish move. So price traded in bullish channel. Uh, this is channel is created. So uh, at starting of first hour, price came down to pullback. Let's say it is a pullback, and again after this candle, it is in channel. So it's bull day, but first hour is bear candle, which is a part of channel as well. So from top there is pullback, and then market moved to the channel. So day is bull day, but first hour is bear day. So name indicates bear buying day. Let's take full day review. So today, in general, what happened is first bar, bear bar. So it shows that it actually part of bull channel where sellers have also space of second leg. So price came to broke down to EMA and came to this level. So first hour is majorly selling pressure seen. So here good trades are can be happen. Let's say after selling on closing of first candle, and then after breakdown of this EMA as well this green candle. So SL order can be traded here. Some of the buyers they can trade on opening reversal green candle. So let's say these disappointed buyers exited this point. This bull bar again entry, or if not exited here, you can scale in, put your SL here and enjoy this move. This is the normal day, normal like day that first hour or first 2 hour probably traded in pullbacks, bear pullback. After yesterday was green or bull channel day. So this is the part of channel where sellers have space of second leg. So you can enter here, and after this exhausted move or after this gain candle, you can exit on selling trade. But major swing is bull channel in day. So after this point or after this point, EMA breakout, buyers can enter with SL of this and just ride it. After this move, breakout mode, uh, sellers have same two leg move, first leg, second leg. So we considered it as a wedge. We will take example. You can scale in here, we can scale in here. So what buyers are trying to do is this channel's form and this channel uh, going higher and higher, right? So chances are that day's high will be taken out. Early day, this exhausted move shows that day's low and highs are already formed. This is the high of the day. This is the day of the day, low of the day. So these two are already formed. It is early sign that. Then price to come to midpoint. So by taking SL of this, always in approach for bull channel, bull trade is also have larger probability because yesterday also bull channel is there and starting of the hour is pullback to this bull channel lower portion. So by taking bet on this side is more profitable or probability is higher than selling trade. But uh, as we see, sellers have also same space. Sellers also traded for two leg move. Here starting of the day, this mid trend day, after second half 2 o'clock, but it is not swing trade. It considered as a scalping. Major part is uh, considered in bull channel. Swing trade is to be taken here. Okay. So always in approach, let's say you put SL here, just scaling or put bracket order, stop loss here and target here. This is measured move. We will see in detail analysis. So great bull day. After this panicking mode, a lot of buyers understood this, that this is probably low of the day. This EMA breakout not sustained in just two bull bar. Price came to above EMA level. Okay, so our uh, same pattern in all chart, which is the one way of trade all structure. We will see that in that case, midpoint approach, we are finding midpoint trade, mid price point trade. So we will also see that. Okay. Okay, let's see detail analysis. Okay. First we consider total days range. What is the total range of the day? So after opening first candle, downside move which is of 62 point, then after a reversal from that exhausted move or this bear candle, uh, 78 point up move. So there is, we consider range as a 78 point, but uh, as a bull leg and as a bear leg, we can consider it as a 120 point move in a single day. So great opportunities are there. Okay, let's consider it. First candle, bear bar. So here after seeing bear bar, what we can do is we have to do analysis. Let's say we consider 10 days, and what we are doing is after first candle, so we are taking trade on in that direction. Like yesterday, this is the bull bar. So after closing on buying on closing, we just set we are setting measured move. Let's say open to the close and measured move. So in analysis, we I normally seen that this is easy to achievable in first hour. Here today same happen that after first candle, if we look measured move to the downside, okay. So let's say you sold also second candle, so there is spike is continued. Okay, this is the spike first leg. So measured move target can be achievable here. So there are also lot example here is that this is the red candle. So if you sold here, so this is the uh, same not achievable day. Here doji candle is there. It is the bull candle, so considered as a part of bull channel, which is uh, yesterday's part as well. Okay, so here is the doji candle. So we will take same analysis as well, but after seeing this candle, there is 50-50 chances of going in your favor. So taking trade is matter here. So second bear bar, which is closes on its low, so sell on second candle close. Now third candle is green bull bar, which is considered as a opening day reversal candle, but it not followed through, and this spike it continued. So who's buy on third candle are exiting below that. This fifth candle is we consider it as a exhausted bear bar, or it is a end of first leg. Why? Because if sellers or this first leg want to move further, so it has to, let's say, just break out, retest, or form a channel. Why it act like okay, I am exhausted, I am done here. Fifth candle. So many of the buyers or opening reversal traders are consider it as a exhausted move. Yesterday same happened. So this is the part of bull channel. So first leg, second leg, pull back to the bottom of the channel, testing of the bottom of channel. So opening reversal trader or many swing traders which considered it as a bottom of the bull channel. So after six candle, many buyers have entered who not exited below third candle. Buy always in approach of this bull channel and scale in approach. So they again entered on sixth candle. Sixth candle is bull bar, which is closes on its high, so can be considered as a reversal candle or end of first leg in selling move. Ninth candle, which is green bar, which have breakout above this EMA. So this fifth candle is breakdown to EMA. Now 6 and 7 candle bull bar are breaking above moving average. Now 8th candle uh, doji candle, 9 candle. So what is happening here is this is uh, sidebars. What we can, after seeing this, what we can conclude is that, like we seen yesterday's move as well, that this is the first leg. Now this spike is ending here. Now sellers not taking price to the downside, more downside. So somewhere here, second leg is going to completed. Okay. So this is the pullback to the upside, two green bars, bull bars. Now somewhere here and somewhere 12th candle low or 10th candle low. This is considered as a second low, second leg of sellers. Uh, this is the small wedge after these green bars, or it is considered as a first bull bar, second bull bar, and this is the flag pattern. So which is 14th bull bar candle, which is closing on EMA. So good looking bull bar, and buying on 14th close is reasonable and high probability trade, because early day sign is that this is the low of the day which is created. Price came to retest or midpoint, mid price of the day, and if further go up, then probably high of the day is target for buyers. So buying on 14th candle is good. 17th candle is doji. 16th candle, which is retest to EMA, consider it as a retest to EMA, which is also buying on close. Move your SL to here below 6 low. Now same scenario is also seen here yesterday after 2 o'clock, sharp selling pressure. What here happening is that this is the first leg. In this sidebars, there is second leg is finished here, and this continue to upside movement. Green bar, which is closing on EMA, pull back to the EMA, and which is maintaining price above EMA level. Then this momentum is further continue. Same happened today. Same structure happened as well 2 days ago. Selling have first leg. Probably this 45 candle, which is second leg. 46 bull bar, which is breaking above EMA candle. 47 candle retest to EMA price or breakout price, and then further movement is continued. So why bulls are traded? Because two approaches traded. That bull channel will continue. We will see 2 or 3 example more today. So this bull channel will be continued. So target of this is to be measured. How measured? So after seeing this until 14th candle, what measured move we are looking for is putting just 50% at 7th candle high. Okay. So in swing trade, the target of measured move is better choice, or we trade for measured move as well. So what happen is this 14th candle given breakout, 16th candle retest to it, and 18th candle, which is closing on high bull bar candle. So it considered as a measured move 50% and then move continue. So this is the good swing example early in the day. Opening reversal trade as well. Who traded here? Just scale in here, move your SL to here. After seeing this breakout, move, trail your SL, or just move SL to swing lows. Okay. Okay. After 18 candle is bull bar candle. Buy on close. If not entered here, if view not is cleared here, we will show you why view can't be cleared here, because these movies have seller's probability as well, that 13th candle which is selling on close. But how you will look at this position for yesterday's move which is carried out for the today. So if we sold here, so after seeing this candle, this is the signal bar which gave signal to selling here. So probably we have to exit here. If we put a stop loss here, so stop loss hit here, but we have to change mindset. We have to change that way, and taking small losses, we have to consider it as a bull channel in this day. This is the exhausted move. Second is in 13 bear candle we are trading for second leg. So second leg is not very strong, but is going to happen. It is sure that, but it is not very strong. So after, if you taking second leg, then changing mindset or changing reverse trade is good approach. 19 candle good bull bar. Now this candle broke above midpoint of the day, or this downside move which have 50% pullback chances, but it broke above that level, and it have also follow through 20 candle which is bull bar. Now these 3-4 bull bar candle have gone too far from EMA, so it is the sign that there is going to bull channel, or there is first leg and further second leg is going on. What happened? Okay, so 21 candle bear bar. So below that exiting some of the portion is good decision. 21 candle bear bar, 22 candle, 23rd candle is bear bar. Now here what we observed is here is that if they are selling, let's say 50% pullback sellers are there, they are selling here, or some of the bear traders are that they just sold here near moving average, pullback to moving average, low to short. Now what they thought is, after this after some of the bull bar, they again sell at next bear bar, so which is 21 bar. So bear sold 21 bar, and they got first leg which is decent move. After 24 bull bar which is not follow through for 23rd candle, now they have to exit here. So this is the just approach. This is not the good way. If anybody traded for it, that is good, because we easily observed is that who traded here, who traded sell position here, now they have chance to exit and 50% move. Sold one lot here, sold second lot here, exit at break even position. This is the scaling approach. Can be traded here, but too risky. That after this green move, the market is going up, so we have to take decision and move with market. So buying trade is uh, have a high probability. Now here sidebars, there is same sidebars are there where wedges happen. So same also happen. So this is 30 candle, which is beer bar, which is end of this first leg, second leg. So 60% closing of this body, and this we consider as a 1 minute time frame bull candle, which taken further movement away. So 31 green candle buy on close is good reason. Even 28th candle, 24th candle, 26th candle buying on close. Keep your SL to below moving average or just moving average, and always in approach. Scale in approach can be considered here. After taking position here, just scale in and move your SL to break even somewhere here. 18th close, breakout candle close, and wait for target to hit. So this is the channel form here, which is closing on its high. Sellers have also same opportunities, that every breakout they are selling, but they are not in profit. 38 candle bear bar, which have no good follow through, faded by buyers. Now this is 42 candle, which is bear bar, which is also faded by uh, bulls. Now they lost the momentum here. 45, 44th candle, lost the momentum bear candle. 45 candle, they are not gaining momentum bears. And 46 candle, which is breakout candle to this wedge, small wedge, little pullback happened to it, and then again closing very next candle closing above its high, low is high, above is high. Consider it as a closing of that candle near to previous candle high. Buy on that candle is good reason, because day's high is here. So breakout of that move can be captured here. Put your SL here, but always in approach. If price will go down, then we again see this type of move, and we scale in here, somewhat here, and exit at break even and second position, which is in profit. So buying here is also good approach. 48 candle bull bar closing on its high. 45 candle, we consider it as a pullback to breakout or retest. So whoever sold here, exiting below it, new buyers or every candle buyers, scalpers are entered here, and further bull bars are continuing traded. This is the uh, ranged bull channel, or we can say that small small movement bull channel. Ended here, it's here 60th candle where sellers bear bar is there, which got follow through 62 candle. Now this is the decent bear bar which have followed through to bear bar, and they are again followed by 63 candle. Now interesting part is to here is that 63 candle, which is breaking below EMA, not able to close below 50%. So there are buying going here. Why? Because this is the breakout candle, low is not broken out, closing on its midpoint. So there are buyers here. Now this leg is probably going to finish. Why we are taking it as a first leg is going to finish? Because this is one approach is for that is bull channel. Now bull channel, let's say every breakout it's magnet for sellers, but they have also same space. Buyers have larger move. Here we observe that this is the buyer's move. This is the seller's two leg move. This is the channel. So testing of low of channel is equally important. So it happened here. 63rd candle, 64th candle, which is not able to break above, but we consider it as a bull channel. In bull channel, consider it as a low tested and bull bar. 46 candle. If you are not traded here, if you are not taking decision here, so what I have done here is that, okay, after seeing this bar, I assume that in this first hour, first 4 or 5 candle, sellers have dominant role. Sellers have more space. Then these move have no bear bar, no consecutive bars, so sellers are losing here. After 21 candle, they scalped here, but not for swing trade. Not if they put your SL here, it just got hit. Now in this channel, there is no consecutive more than 2 bars are there. Even 1 bar. Consider it one bear bar, not followed through. One bear bar, not followed through. Here, two move which is exhausted, we have pullback or flag pattern in bull bar, not considered as a good signal bar for bear. Here you can see that not any bear bar which followed through. Even one candle bear bar and which is not followed through, this is faded by buyers. Now if you see here, 3 bull bar are there. There is going on by pullback to the bull bar, but not able to break above it. So we consider it as a 66 candle as a starting of second leg. 67 candle bear bar, which is part of second leg. Let's say if you traded here, okay. Why? Because sellers have same space. This is the bear channel. In this time frame, we also assume that this channel is going to end at last hours of day. So if we traded 67th candle, after seeing 68th candle, it is far way better than to exit. Okay, so 67th low, which is the second leg of seller, which is completed here, not broke below. So whoever they bought here after putting SL here, because many, I have also observed that many moves come in last hour, 2:15 candle, hourly candle, or after 2:30 move. So I assume that there were also same traders are there who traded in last hour move. Same yesterday also same happened that this is the 13:50 candle just before 2 o'clock that this move happened and this is faded by buyers. But here no single bar is good looking selling bars except 64th candle. If you sold here, just manage your position well, or your view can be also possibly wrong. After seeing 66 candle, you can exit at break even price. Okay. So see, after seeing 68 bull bar closing on its high, we can trade it for buying position. Let's consider it as a 68 buying on close, 69 candle, which is pullback to this candle, which is not breaking, or even 50% body is there to tail. So have more probability of going upside. So 70 candle, which traded high of the day, very next candle, and follow through to, consider it as a follow through to 68 candle. If not traded well, but it got SL hitted because no, very less traders are exited here. So it just came back to low of the day and exited here. So even if sold on 67 candle, can scale in here. put by take these entries taken to the SL of this, considered this. So scale in here and somewhere negligible position to be exited here. After in this last hour, we can't consider it as a swing trade. Okay, in this scenario, it just sidebars. Yesterday it was a good looking fading signal, but it appeared to be around 2 o'clock. It is 2:30 a candle. So if you traded and if manage well, you easily get out at uh, break even position. It is very hard, I know. I just managed to enter here and I put a 10 point profit loss target. So just target is hit here. But after seeing this candle, I also uh, surely that this is the break even exit candle. Okay. So day is decent. I can say that this is the faded move. Our very first example is of faded move where price is faded by bulls and bears. So here we throughout this day assume that if any channel is continued, let's say here buying channel is continued, after seeing this faded by buyers, we also make decision that at certain level or at a 50% point or after losing bull position, sellers can also fade here. This is the scenario that sellers try to fade. We consider it as a faded by sellers, but they not followed through, and moving average act as a support for it. So second leg is completed here and again moved up. So small wedge created here, small wedge created here, small wedge created here. This is the swing high chances are there. So every swing high is SL for it and is not hitted. SL not got hitted. EMA gap is equally maintained throughout the day. There is one or two candle which is just touch EMA bar. So what we can do is after taking position, after achieving 1x to 2x, what we can do is just move your SL with EMA or trail your SL with EMA. Good approach. And another trailing method is after seeing third consecutive bar, Beard's third consecutive bar, we exit here. In this bull channel, there is no third consecutive bars of Beards are there. Here what happen is that, so we can exit here or we can easily hit target up to this level. We easily enjoy move up to this level. Okay. So easy bear first half, then faded by buyers. So I always consider it as a bear day. Starting of the day is bear, then low is done, and bear buying day. So bears have first space, and then throughout the day buyers are active. Okay, let's take example and one method or one structure through for all days. Let's see that. Okay, let's see other pattern as well. Okay, so this is the same day. We consider it as the same day. Oh, okay. Okay. Why? Because in first two or three bar, selling pressure is continued and broke below EMA. Now it has decent bull bar, and after checking EMA signal or EMA test, it continued follow through. Now why I took example of fade here? Because buyers have faded sellers move. Same happen here. Now I I normally feel that this move can easily faded by sellers, but what uh, uh, high probability buying signal or buying position are is that because of bull channel is very strong here. Here what happen is that this move is considered it as a exhausted move. So sellers have faded it. This is the strong breakout mode. Here first candle is breakout, then follow through is not like breakout candle. So sellers have faded here and price just uh, go around midpoint of the day and traded midpoint of the day. Here what happen is that and notice to no, noticing point is here that price breaking its high on high after this low is formed, price just broke above this high. So consider it here. So there is good buying reason is also that we can trade for this fading approach, 50% move approach, or fading high of the day. So these are the good reason to trade, take buying position here. So this is the one example of same. We consider it as a opening same structure. Okay, this is the another example where seller there is bear bar, one bear bar which is not followed good follow through bear bar, and this is faded by buyers. Now what happened here is that this is the good uh, spike, and this spike converted into channel. So here is also same reason applicable. So this formed a spike here. This is the measured move which is easily captured here. I captured it here. I traded for this. Even I traded first green candle, and after seeing this move I not exited. After this candle I am very sure that this is the exhausted move. I just scaled in here and I exited around here. Okay, so bull spike and channel is to be created is have high percentage probability. So this is the 1 day structure where sellers have also same uh, space like first leg, second leg. So this is also scalar scaling opportunity. This is the also breakout selling opportunity. Same also happen here that every breakout is faded by sellers. So here is also example. Here are the sellers in loose position. So up move further continued because sellers uh, after losing here they not came for 12 to 10 to 12 candles. So here we easily observe that. Okay. So there is also third chart is also same looking here is okay. So first to follow through bear bar, pull back to the EMA, then again follow through. This candle is considered, buyers consider it as a exhausted move. By this maintained low here, after seeing this candle, buying position can be created here, bull bar. Easily second leg is completed here. Now we can also trade it for 50% of the day, high of the day, and even more. This is the yeah, great bull day where a reward is up to 3x, 4x, and 5x. If we consider we taken position here after EMA test, if we taken position here and put just SL here and move SL to here after this move, so this SL portion or risk portion is to be 3x type of this here. So here's also same pace available that sellers have not faded here or not able to fade here. So today same happen, bear channel is continued. Sellers have equal space, but they not able to fade here. Okay, so these three structures are possibility to look. Okay, so our one way of trade all day structure, in this chapter we are considering two type of mainly trades. One is wage trade, and other is midpoint or mid price day. So wage is to be formed like this. So let's take today's chart. Okay, so for wage scenario, we consider here as a, this is also wage, but if we are not able to trade here, this is the wage. This bear bar is last leg. This bull bar is signal for the wage breakout. We can trade it for that. So I traded for that. So this is the first wage pattern. Second wage pattern is happen here, that selling pressure are not further going on. Sellers losing this position here or move here. So this bull bar is good signal bar. Even this bull bar is also good signal bar. We can trade that. We can scale in here for days high. So exactly it happened here. Okay, wage, another example of wage is also happen here, that it near its day high. So it's sustaining sustaining its price to days high. So fading is not happening here. Here, one thing too important is that this buyers faded here. So chances are that buyers move is faded by sellers. But if price is sustaining here, so there is less chance of fading. Fading is occur by uh, 2 bar signal. This is considered as a 2 bar signal. This is considered as a 2 bar signal, that bear bar and then 50% or more bull bar is there. So here is small wage pattern happen here. After the seeing this green bar, buying on close, buying on close, buying on close can be seen, and it is approach to be traded here. It is good approach to be traded here for always in position, scaling position or swing trade. Okay, move your SL to just EMA and swing low. Now another type we are finding is midday approach. What happened in midday approach is that price came to midpoint, so we have to take decision after that. In all this scenario is one-sided move, and then price came to buy opposite move. Here what happened is that first sellers have space, then buyers kept down to midpoint, and it gives breakout to the midpoint. Here no any bear bar or good bear bar is here, which is the signal bar for midday approach for our signal. What we can do is that if not traded here this first leg, just wait, see seller space, and at mid portion near its EMA we can easily get signal of uh, second leg low and pull bar, which is the good signal and can be traded here. So here midday approach is to be breakout type. Here no reversal traded here because any no reversal bar is presently here. Bear bar, which is bear bar. Here is breakout point. Midpoint is breakout. So we trade it for high of the day or close on high of the day. This is the reversal candle first, and then moved further to the upside. Bull channel is there. Okay. So midpoint approach is good traded here. Wage can be traded here. Okay. Consider it as a easy day. Always in approach at this level. Most important. So many of the scaling opportunities are there. So we can trade as well. Okay. So good bull day. So this is the consecutive green candle day. Yesterday also good bull channel is there. So there is first half is pullback to that level, and then again bull channel is created. So that's it, guys. Thank you.